Hello and welcome to the 5th episode of a brand new podcast called Tax Tea Break with GoSimpleTax. It's a 6-part podcast series where I speak to tax and self-assessment experts who offer free time and money-saving tax tips for sole traders, private landlords and others who pay UK tax via self-assessment. My name is Mark Williams and I'm your host. Hopefully you've made yourself a nice cuppa. Now, each 20-minute episode has its own subject, and in this, our 5th episode, we'll be talking about how to complete your self-assessment tax return in 6 simple steps. Very few people enjoy filling in tax returns, and some people really struggle with them. Because they don't find it easy, it can be something they put off because they just hate doing them so much. In this episode, we're going to give you guidance on how to get your self-assessment tax return completed in 6 simple steps, which hopefully is going to make your life much easier. Before I introduce today's guest expert, let's find out more about GoSimpleTax and how it could benefit you if you pay tax via self-assessment.
Tax returns. Do they fill you with fear? Self-assessments can be, taxing. At GoSimpleTax, our software makes it a doddle. Submit your return quickly and easily. Simple. GoSimpleTax flags potential tax savings and deductions you may be entitled to and could save you money. An inbuilt error checker ensures no mistakes are made. And with tens of thousands of returns submitted, you're in good hands. Our excellent support team is there to support you at every step of the way. GoSimpleTax, the easy solution for making tax digital. Did I mention it's free to try? Let us help you. GoSimpleTax, the simple way to tax return.
It's time now to introduce our expert, Mike Parks, who is the Technical Director of GoSimpleTax. For most of Mike's 30-year career, he's worked in practice as well as for HMRC, so Mike has a thorough knowledge of personal and small business tax, including completing and filing self-assessment tax returns. Welcome, Mike.
Thank you. Thanks for inviting me.
You must have seen thousands of tax returns over the years, Mike.
Literally thousands, yes. I've been doing self-assessment since 1997, so quite a few.
And I suppose we should start by making the important point that in order to file a self-assessment tax return, you've got to be registered. So if you didn't file a tax return last year, the first thing you should do is make sure you're registered.
Yeah, that's crucial. Without registration and obtaining the UTR, that's a unique taxpayer reference, you cannot file a tax return. So absolutely crucial. First piece of crucial information, register.
Great, okay. And people do that via the government website, gov.uk, don't they?
Correct, yes. You can do it online or you can download the paperwork and send it in manually if you want to. Obviously, online's quicker, then you would receive the UTR much quicker. So you need to give yourself plenty of time.
And then what happens if you've filled in a self-assessment tax return previously, say a number of years ago? You'll already have the UTR, the unique taxpayer reference number. So it's just a matter of digging that out, making sure that you know what that is.
Correct. Generally speaking, you only ever have one UTR number throughout your entire life. But there are exceptions to that case. But generally speaking, you'll get one UTR. If you forget it, you can go on the government website and trigger a reminder for that as well, or give them a call or do a web chat and they can initiate sending out some paperwork and reminders for you.
Okay, Mike, so let's move on to your first simple step then.
Simply, it's just to improve your knowledge around the tax and the tax around in your personal affairs. So if you're employed, what does that entail? What allowances can you claim? If you're self-employed, what are your obligations in terms of recording income, expenses, etc. There's a wealth of information out there, some of it good, some of it bad. A good starting point was HMRC's websites.
Yeah, so they offer help sheets, don't they? Particularly on things which we'll come on to speak about, but supplementary pages where the information can be slightly more complex.
Correct, yes. So every supplementary page, as you say, will have different help sheets, and those supplementary pages are related to specific types of income, and therefore the guidance on those are related to that income type or expense type.
Great, okay. And if relevant, I mean, even digging out your tax return, previous tax returns, just to refresh your memory, remind yourself of what information you need to enter and where it goes, that can be helpful, can't it?
Yeah, it's always a good starting point if you've done one in the past. So always look at previous year's tax returns. That will help you and also help you not miss anything as well.
Great, okay. And then for people that haven't seen a sort of self-assessment tax return previously, normally they're made up of 2 parts, aren't they? You've got the main tax return, which is the SA 100 form, and then there are supplementary pages. Can you give us a few examples of what those supplementary pages would be, Mike?
Yeah, the main ones, the popular ones, will be the SA 102, which is to declare or record your self-employment income for 11 days. So if you have company benefits, car benefits, medical benefits, that information goes on the SA 102. If you're a sole trader, then you fill in either an SA 103 full or an SA 103 short. The main distinction between the two is if your turnover in self-employment is less than 85,000, we do the short version. If it's more than 85,000, we do the full version. And you can go on to your income from a trust. So if you're a beneficiary of a trust, that's an SA 107. Or if you have capital gains tax, that's also an asset that's chargeable to capital gains tax, that's form SA 108. And of course, you've got the SA 105, which is a property income, and that covers such things as furnished to holiday lettings or a buy to let that you may have.
So can we move on then to your second step, please?
Yeah, sure. The next step is really to make sure you gather all your information together. So you've looked at previous year's tax returns. You may have done a list of the types of income that you've got, but then actually go away and get the information you need. So do you have a UTR number? If you have that, make sure you've got that to hand, your national insurance number, details of any taxed income that you've had during the year. A common mistake is people will miss off their employment off the self-assessment tax return because they believe HMRC have that information already. And whilst they do, it's important you also include it in your tax return. So gathering all that information, if you make payments to charity, to pensions, etc., just bring it all together. If you can use software, that's great. You can record it in the software. If you're not comfortable with software, a simple spreadsheet or just a book, just to write it down. Just make sure you're not missing anything.
And it really can't be overstated just how much easier it makes filling out a self-assessment tax return. If you're a sole trader and all your income and expenses are all nicely itemized within software, then it just saves you so much time and effort, doesn't it?
Oh, it's much easier. Everything's to hand for you. And more importantly, you're less likely to miss expenses and income when you record things down in software. As an example, if you're self-employed and you don't write down your expenses and you miss something, you could end up overpaying taxes. Now, currently, if you miss £100 worth of expenses with national insurance, you're in the region of £30 extra tax to pay, and that adds up.
It does indeed. Great point. Thanks, Mike. So can we move forward then to your step 3?
Yeah, it's probably actually one of the most important ones is get the timing right and don't leave it till the last minute. It's in the region something 45% of people file a tax return within the last 30 days before the deadline. That's giving yourself an immense amount of pressure, putting yourself under pressure. Not only does it fall at Christmas, the time when you want to be relaxing and spending time with the family, but you've got the pressure of the deadline, and that's when mistakes are made. So there's no reason why you can't start preparing the tax return in the April after the end of the tax year.
Yeah. And just to make the point, just because you do file early, it doesn't affect the time when you need to pay the tax. As you say, it's just better use of your time, get the tax return done and dusted, off your plate, and then you haven't got that mad panic come December or January as you're sort of battling sort of that online filing deadline.
Absolutely. You're absolutely right. So you could file your tax in April, May, June of the year. You still don't pay taxes until January the following year. So there's no desire, there's no urgency to pay the tax. And on the flip side of that, if you do have a higher tax bill than anticipated, you've got some advance notice. There's nothing worse than completing the tax return in the last week of January and not realising you haven't sufficient savings to cover the tax bill.
Indeed. And you talk about picking the right time, so you're not battling a deadline, you're not up against it. How important is it to pick the right place as well, so you're free from distraction? You need sort of be able to concentrate on the task in hand, really, don't you?
I think so. If you can, if you've got a family at home, try and take a step away from the family, wherever it may be, just settle down in a quiet space and crack on with it.
Okay, thanks, Mike. Can we move forward then on to step 4?
Yeah, take your time. Don't rush. If you're not leaving it to the last minute, you should have time. There are figures banded around about it takes on average 3 hours to complete self-assessment tax return. 3 hours is quite an intense time to sit down and spend filing the tax return. So you might want to do it in a couple of sessions. So yeah, just take your time. Don't rush it. Mistakes happen when things are rushed.
Exactly. And as you say, you're more likely to miss things, put the wrong figures in or enter the right figures in the wrong place. So it is about taking your time, being methodical and just working through it in a very logical, ordered way.
Absolutely, yeah. Goes back to that first step. Get everything together, get the list, and work through the list methodically and take your time.
And talking of mistakes then, Mike, I mean, what happens if someone realises later that they have made a mistake in the self-assessment tax return? Is there a way for them to amend it?
Yes. So the filing deadline for a tax return is the 31st of January, but you have another 12 months after that date in which to make any amendments. So if you do discover you've missed some income or missed some expenses and you need to update your tax return, perfectly entitled to do that. So you've got 12 months in which to do. The caveat to that is if as a result of making the amendment you owe extra tax, and not only will you have to pay extra tax, then there might be some interest charges depending on when extra tax is paid. Similarly, though, if you've overpaid tax, you won't be refunded, or the overpaying will be offset against any future tax liabilities.
So I suppose the important thing is it pays to not make those mistakes and get it as accurate and spot on as you can, really.
Absolutely, but there are times when you might need to submit an amendment. You might not have the actual information to hand when you file your tax return. You might be waiting for some, if you're self-employed, you might be waiting for confirmation for something from the supplier or something, or the bank on a loan interest, or there could be a number of reasons why you can't file accurate information at the time, and that's absolutely acceptable. So it is important that there is that mechanism there should you need to make a change.
Great, thanks, Mike. So step 5.
So that comes on to read the tax return when you're filling it out. Make sure you read the boxes, make sure you understand what information is required. If necessary, reference the boxes or the information to the HMRC help sheets. So referring back to the previous schedules, if you're on the SA 102 employment page, there's a supporting help sheet, and that will give you guidance on what's required in each of the boxes. Again, but taking your time and reading through those, making sure you're not missing anything.
Yeah, so rushing through it, not reading things carefully, you can get it wrong, and that can lead to the mistakes that we've already spoken about.
Absolutely, yes. Yeah.
Great. Okay. So step 6, Mike.
Ask for help. Nothing wrong in asking for help. Everybody needs help at some point. So there are various places you can get help from. Again, start with HMRC. They do have some good articles and some good help sheets on their website. They don't go into too much detail, so it's a broad brush approach they have, but I would always start there. There are some other good websites you can look at. So, for example, the Low Income Tax Reform Group. That's a really good place to go researching. HMRC, you can phone them up. There are delays when dealing with them, but they can also be helpful on the phone. And equally, you can sometimes do web chat with HMRC. So there's lots of different resources and availability. But again, the closer you leave it to January, the longer you're going to have to wait on the phone, the longer you're going to have to wait for web chat, the more rushing around you're going to be looking for this help and assistance. If you're using software, then the software will generally provide help files and guides and hints and tips. Also, it can't offer specific tax advice, but it can give you general guidance. So that's always a good source of information as well. And ultimately, if you're really uncomfortable or your affairs are a little more complex, then you could use an accountant or a tax advisor.
But obviously, that comes with a cost, and that cost is likely to be higher than if you use sort of dedicated self-assessment filing software.
Yes. Yeah. You would generally, there are some services out there that will pay tax return on a fixed fee, and those fees vary depending on the circumstances. But equally, some accountants and tax advisors will charge by the hour as well, so it can become quite costly.
Brilliant steps there, Mike. Just let's move on to now common reasons why people miss the filing deadline. Obviously, the online filing deadline is midnight on the 31st of January. What happens if someone misses that deadline? What are the consequences of that?
There's an immediate fine of £100. That's the first thing. That's the main drive for people filing the tax return on time. And most fines escalate the longer you leave your return outstanding. And it's outstanding for up to a year. It can be up to £1,200. So it's extremely expensive not to file your tax return on time. So why do people file tax returns late? They forget. Genuinely, they forget. Some people actually don't care. I've been working in tax for many, many years, and sometimes you see the same people every year file a tax return and pay the fine. It's a cyclical event for them. It's just part and parcel of their business or their life. So you do have a small minority of people in that fear. People are that scared of it, don't know how to do it, leave it to the last minute, panic. And there is a fear factor around taxes. You don't want to get it wrong. You don't want to upset the taxman, etc. Or there could be genuine reasons. It could be ill. You could have suffered a bereavement recently. So there are lots of reasons why people will file a tax return late.
And in those cases, if someone does file late and there are genuine, understandable reasons, then you can speak to HMRC, and maybe that late filing penalty can be waived in certain circumstances.
Yes, in certain circumstances it can be, yes. So, and then again, that process can be done online as well. You can make it, so once the penalty notice has been issued, you can appeal that online.
Great. Mike, once again, thank you very much indeed for joining us, and lots of great advice in there. All that remains is for me to say thank you very much for being a superb guest and for sharing your knowledge and experience with us.
You're welcome. Thank you very much.
there you have it. So what are the 3 key takeaways from this episode? 1, make your life much less stressful. Don't leave filling in your self-assessment tax return to the last minute. You can do it as soon as the new tax year begins on 6th of April. 2, pre-arm yourself with the information you need to complete your tax return, and don't rush because this is where mistakes can happen. 3, reach out for support and make best use of technology so that completing your self-assessment tax return is made much easier. Hopefully this episode has given you lots of great tips so that from now on you'll find it much easier to complete and file your self-assessment tax return. You can also head over to the GoSimpleTax website, which is GoSimpleTax.com, where you'll find lots of great free content on self-assessment and many other tax-related topics. In our next episode, you can find out more about making tax digital, which has already impacted VAT-registered businesses. Income tax self-assessment is next, and making tax digital will bring in some significant changes that you really need to know about and prepare for. So don't miss the 6th and final episode of the series. We hope that you've enjoyed this episode and that you've picked up lots of great tips. Please tell others about this podcast and like and share our social media posts, because we really do want to help as many sole traders, private landlords and expats as possible. Thanks for listening. Until next time.